but you will still continue to win if it goes this direction. You have no risk to the upside. No risk to the upside. So it can continue to go up and you can still win. So if I move this over to the right a little bit, you can see that it still stays green after it passes this spread, the call spread. So you have no upside risk. You have an 85% chance of winning on this trade. So you have a super high probability of winning. And if the market, if you're dealing with a market that's a bull market and you're doing iron condors, there. In this video, we're going to discuss a swing trade strategy that here at the Dorian Trader, we believe it is an amazing strategy that everyone should be aware of, especially in the bull market when you're trying to play both sides of an iron condor. We're going to introduce a swing trade that we call a no upside risk iron condor that will allow you to benefit if the market stays in a range, if it goes up a lot, if it goes down some. You will be able to benefit in several different ways, even in a bull market using an iron condor, because this is a no upside risk iron condor structure that we have created here at the Dorian Trader. So before we jump into this, we want to point out that we're going to be demonstrating this on the ES options. The ES options are futures options that are regulated by the Commodities Futures Trading Commission and not the SEC. However, the ES is just like the index that is super popular, the SPX, and that people are using for short-term trades, people are using for swing trades, people are using for long-term trades. Here at the Dorian Trader, we believe that the ES is a better instrument or underlining to trade for anything over 30 days. So definitely for this swing trade type of strategy. The Dorian Trader, our swing trade is primarily between 30 and 60 days. Our short-term trades are things that are less than 30 days, and our long-term trades are things that are over 60 days. For the most part, we have some short-term trades that are 0 DTE, a 1 DTE, a 7 DTE. DTE means days to expiration. Then we have some things that we call long dated that's more familiar to people as leaps. We call them long dated options or the long dated strategy because we are selling options a year or more out. So at the Dorian Trader, our goal is to help you find a strategy that meets your temperament, that you can make money consistently to at least supplement your income. And if you have bigger aspirations, make it your primary source of income. So some people might want to trade short term because it sounds attractive, like day trading with options, but it might not fit your temperament. Maybe a longer dated type of strategy will fit your temperament. Maybe a swing trade, what we call it the Dorian Trader bread and butter strategy, might fit your temperament best. So this is a swing trade that we're going to be discussing. Once again, the no upside risk iron condor. So let's break that down now, and we're going to do it in ES because once again, we believe the ES is better to trade it with things that are not short term because you have what is called span margin in the with options on futures. So it's like portfolio margin. It gives you better leverage to be able to trade these options. When you're doing something short term, it doesn't necessarily mean that, but when you're doing it 30 plus days out, it's almost always better to use options on futures than options on stock. So that is the premise that we have here, and that's why we are demonstrating this with the ES options. So let's break this no upside risk iron condor down. So we're going to go to this 45 days expiration that you can see on your screen here, and we're going to sell a call spread at or near the 30 delta. So in this case, we're selling the 30 delta, and we're going to buy 5 points higher. So when you're trading options on futures, the denominator is not uniform like options on stock, which is $100 per point. When you're trading options on futures, you need to know the denominator. With the ES, it's $50 a point. So if you take the 5-point wide spread times $50, then the most you can lose before the premium you receive on this trade is $250. So to have no upside risk when you're doing an iron condor, you're going to have to collect at least $250. At the Dorian Trader, we want to collect at least $50 more so that if the market does shoot up in a significant way, you still make something. You just don't break even. So you want to receive at least $50 more. So we're going to come and put on this put side, and we're going to, on this put side, we're going to sell the 43.80, which is a 15 delta, and then we're going to buy 80 points lower, which is the 4,300, and we're going to collect in this example at least 375. So we're going to lock this so we can keep it that way so we can be able to demonstrate this. So when we collect this 375 and we can only lose 250 on the call side. So if the market jumps up a significant way, it doesn't matter. We're still going to make at least 125 before fees and commissions. So because this Iron Condor has no upside risk the way we structure it. We collect more than what we can lose on the call side. But this trade is still inherently neutral. You want it to stay in between your short strikes so that you can potentially make the 375. Now we're going to break this down by jumping over to this curve view so you can see this. So in this example here, you have the at the money line right here. And because this is an Iron Condor, you want it to stay in between your short strikes. The short strike on the put side, the 43.80, and the short strike on the call side, the 47.20. If it stays in between these two strikes, this is how you can win the most on this trade. This 375, that's the most you can win. If it goes down too much, then this is your loss zone. This is the only direction you can lose if it goes down too much. But you can see this is the at the money line. Once again, it has to go down quite a bit before you start losing. And you do not have risk all the way to zero because you do have this put that you bought, the long leg of the put spread that you bought that created the Iron Condor. Now, but if it goes up, you can see you win most if it stays in this area here, but you will still continue to win if it goes this direction. You have no risk to the upside. No risk to the upside. So it can continue to go up and you can still win. So if I move this over to the right a little bit, you can see that it still stays green after it passes this spread, the call spread. So you have no upside risk. You have an 85% chance of winning on this trade. So you have a super high probability of winning. And if you're dealing with a market that's a bull market and you're doing Iron Condors, it can be really challenging because the market could threaten your Iron Condor significantly. But at the Dorian Trader, we teach members how to do this type of high probability swing trade that you only have risk in one direction, and it has to fall a significant amount before you can lose. If it goes up or stays in a certain range, you're going to win 100% of the time. So you want to understand this strategy. You want to understand this strategy at a high level so that you can use Iron Condors in a bullish market so you can still have a bearish component to your trade, but don't have to deal with the struggles of a traditional Iron Condor in a forever going up market, or a market that feels like it's forever going up. So don't be discouraged with Iron Condors. You can structure it in a way that it can still be super effective and allow you to make money consistently with a swing trade of 30 to 60 days. The Dorian Trader, we call this a bread and butter type of trade. How you can make money consistently without having to manage the trade a lot, not having to watch the trade every single tick, but be able to ring that register the super majority of the time with a profit. So if this video is providing value to you, please like the video. And if you haven't subscribed to our channel yet, please support us and subscribe to our channel. If you have any questions about this strategy, please leave a comment. We answer all comments. If you are looking to learn more, we have webinars every week. Basically, go to our website, look under events. You can sign up for a webinar. It's not a sales pitch. We literally teach. Every webinar we do is live and we teach. So go sign up for our webinars. Consider joining our trading club so that you can learn at a super high level. In our trading club, all members have access to their mic in the chat area, so they can interrupt their instructor at any time by unmuting your mic, and we encourage members to do that. You will not experience that in any other trading club. We are here to help members be successful. That is our goal. That's our value proposition. That is what we strive for, is to help members make money consistently to at least supplement their income or make it their primary source of income. I encourage you to check us out. With that said, we thank you for watching this video. We'll see you in the next one. Bye for now.